What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are talking about the fact that we have a massive amount of fear in the stock market. In fact, all year long, despite the stock market doing nothing but go up and to the right, the fear-greed index has done almost the exact opposite, just gotten more and more fearful. So is this a sign of an impending crash, or is this more of a contrarian indicator? And how should we interpret this in light of the fact that the Federal Reserve is considering tapering soon? Ready? Let's dive in. So you know I talk about this indicator a lot because it communicates volumes about the sentiment of the market. We can break it down. We can look at all of the areas that this index measures in terms of where we're seeing fear and where we're seeing greed and everywhere in between in the stock market. And normally, this is a contrarian indicator. If there's broad fear in the markets, normally that communicates the market is going to continue to grind higher. That's the classic bulls climb a wall of worry. And along with that, bull markets don't usually die of old age. Bull markets die of euphoria. This broad amount of fear in the market would indicate that the market will continue to grind much, much higher from here. Now, one counter argument that I'd like to offer that would indicate the opposite is the parallels that we're seeing between right now and the end of 2018. If we take a look towards the end of 2018, we can see this fear and greed index started to move heavily towards fear and stayed in a highly fearful state, extreme fear, for a while. And what was happening to the stock market during that time? The stock market was experiencing a high amount of volatility and falling very quickly. Now, why does that matter? Well, that was one of the only times in the last couple of years where you saw the fear index be accurate in terms of what it would predict that the market would do. Normally it's contrarian. If there's fear, the market's going to go higher. If there's greed, the market's going to go lower. But this is one of the times when there was a lot of fear and the market was moving lower. So what was happening at the end of 2018? Let's take a look at the Federal Reserve's balance sheet. The second half of 2018 marked the beginning of quantitative tightening when the Federal Reserve was beginning to unload assets off their balance sheet, actively withdrawing money out of the system, because when the Federal Reserve is selling assets into the system, they're selling it in exchange for dollars. And so dollars were being withdrawn from the system. The Federal Reserve's balance sheet was dwindling, and they were making it harder, making money more scarce. Money being more scarce, that is the definition of deflation. When money gets more scarce, that means it becomes more valuable in relation to all of the stuff that's in the system. That means stuff gets cheaper when you're measuring it or pricing it in money. So why is that a parallel to today? Well, what is the Federal Reserve saying that they're planning on doing soon? Not tapering their balance sheet, but tapering their asset purchases. And we know that with a monetary policy, easy money policy, inflationary money system, you have to increase what you did before. You have to double down on old failed policies. You have to do more of what didn't work. It's just like a drug addiction that, many people have pointed out that analogy. Basically, you can't continue with the same level of money printing to get the same level of economic stimulus. What you have to do is increase that over time, because not only do you have to keep prices going up, but you also have to counteract the deflationary forces that are built into nature. That's what technology is. That's what progress is. That's what wealth growth is. Wealth is not a zero-sum game. And so in order to have prices continually go up, not only do you have to print, but you have to print more and more. And asset purchases are how they inject money into the economy, because just like tapering their balance sheet was withdrawing money from the economy, adding something to their balance sheet is adding money to the economy, because they're withdrawing an asset by giving cash, giving money. And so there is massive fear building in the markets right now. Number one, because the market has done nothing but grind higher. So many people are calling it a bubble. Many people are saying a crash is inevitable and right around the corner. But at the same time, there's a lot of fear that tapering will start soon and that the economy cannot handle a decrease in the amount of new money that's being injected. So it's basically like people are afraid that, not even afraid that the Federal Reserve is going to taper their balance sheet, which they're never, ever, 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 ever going to be able to do, because when they try to just decrease their purchases, what's going to happen is the economy won't be able to handle that. The stock market will drop from that. Now, I personally don't think that the stock market drop as a result of the Federal Reserve beginning to taper. I don't believe that will be able to get beyond 10, 15, maybe 20% max, because as soon as everything starts to fall apart, they're going to reverse course as quickly as they started it. And the reason why I think that, all we had to do is look at 2018. What did they do when the economy was apparently the best economy in American history, right? They couldn't handle the 2018 tapering of their balance sheet. And as soon as it started to make the economy look like it couldn't handle it, started to fall apart, stock market started to fall, they reversed course and started adding to their balance sheet once again. So market sentiment would suggest as a contrarian indicator that the market is going to do nothing but grind higher. Other indicators that I've talked about in the past suggest that we're going to experience some heightened volatility, and if that coincides with fears of tapering or the Federal Reserve announcing the beginning of lowering their asset purchases, that could trigger some stock market volatility, some selling, just like it did at the end of 2018. As a result of this outlook where it looks like, yes, there's probably some more upside to this bubble market where it's going to keep on just grinding higher, but the potential for catastrophic collapse is there, so I'm not even going to be anywhere near it. I get that. I get the sentiment. This is one of the reasons why I like the versatility of options, especially for times like this. And if you don't know how to use options, I've got a beginners and an advanced course linked in the description below. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.